Over the past year, the US and Chinese stock markets climbed by 20 to 30%. Gold rose by 50%. Those are solid returns. But in South Korea, the valuation of the entire stock market literally tripled in a single 12-month window. This national boom is anchored to a specific anomaly. As this chart shows, exactly half of the Kospi 200 index is controlled by just two companies, Samsung and SK Hynix. In the US market, it would take the combined weight of the top 220 largest corporations to reach that same concentration. The cash flowing into these two firms has reached extreme levels. SK Hynix is currently distributing 10% of its profits directly to its 35,000 employees as a year-end bonus, an average of nearly $500,000 per worker. At Samsung, employees are threatening to strike for the same payout. This wealth is driven by a severe global supply shortage. The demand for AI hardware has consumed the production capacity for standard memory chips, pushing prices up by 300 to 500%. In the most extreme cases, costs have multiplied 20 times over. Spotting these structural waves before they become obvious requires the right analytical tools. That is what we teach at the Stewardship Finance Academy. We help investors look past top-level headlines to locate the real drivers of wealth creation. The physical requirements of training large-scale AI models have turned these two manufacturers into a high-stakes bottleneck, turning memory into the most lucrative segment of the modern hardware trade. To understand how they captured this bottleneck, we need to look at what they actually make: DRAM. While a hard drive handles long-term storage, DRAM acts like human short-term memory. It is high-speed, temporary storage that holds data for immediate use, wiping completely the second the power is cut. This market was once strictly American. Intel introduced the first commercial DRAM back in 1970, and companies like Texas Instruments and Motorola built an entire domestic industry around the technology. In the 1980s, the Japanese electronics sector utilized heavy state subsidies and bank backing to seize the market. They achieved higher manufacturing yields and lower prices than American firms could match, eventually controlling 80% of global DRAM production by 1985. South Korea's massive family-controlled conglomerates, the chaebols, responded with an even more aggressive playbook. They took on extreme domestic and foreign debt to fund counter-cyclical investment. When memory prices dropped, they expanded production further, deliberately losing money to starve out their international competitors. This strategy nearly collapsed during the 1997 Asian financial crisis. Facing widespread bankruptcy, South Korea accepted a $58 billion IMF bailout, which forced the domestic memory players into bitter corporate mergers. The survivor of that debt-ridden consolidation eventually became the modern SK Hynix. South Korea's position at the top is the direct result of a 50-year war of financial attrition, a strategy of debt and expansion that systematically wiped out every other global competitor on the map. Even as part of an oligopoly, SK Hynix was consistently overshadowed by its larger domestic rival, Samsung. To close the gap, SK Hynix invested over $2 billion into a niche, unproven technology called high bandwidth memory, or HBM. They were attempting to break through the memory wall. In a traditional layout, a graphics processor is surrounded by flat memory chips. This configuration takes up physical space and creates a data traffic jam, as information must travel across the distance to reach the processor. The HBM solution stacks those memory chips vertically, directly beside the processor. This architecture drastically reduces the physical distance data must travel, allowing for speeds more than 10 times higher than conventional memory arrays. This technology sat on the shelf for years, until ChatGPT launched in 2022. The computational requirements of generative AI required specific high-capacity processors, and those processors required high-bandwidth memory to operate at scale. Samsung's delay in adopting vertical architecture left a vacuum that SK Hynix felt. Their long-term gamble resulted in 69% HBM market share by early 2025, positioning them as the primary supplier for Nvidia's AI hardware during the peak of the surge. This shift triggered a panicked reaction. Rivals like Samsung and Micron are now physically converting their standard DRAM production lines into HBM facilities to capture the high margins of the AI sector. This pivot is creating a ripple effect across the entire electronics industry. With factory floor space prioritized for AI memory, standard production has been squeezed, causing prices for phones, computers, and cars to rise sharply. These companies are currently being re-rated by the financial markets. Because HBM requires deep customization and locked-in pricing, investors are treating memory manufacturers as stable, high-margin tech assets rather than cheap, cyclical commodities. Identifying these specific structural bottlenecks is the core mission of the Stewardship Finance Academy. We train our members to recognize these market transitions before the broader public catches on. To track these supply chain shifts in real time, join our free stock investment masterclass via the link below. The AI revolution is anchored to physical constraints, and recognizing them is how you track the wealth reshaping our global economy.